first 3,000 spots available in the Morrison government's first home buyer scheme have already been filled in just over a week since it began. Thousands of first home buyers have rushed to the first home loan deposit scheme to help them get into the property market sooner. To discuss this, I'm now joined by Sophie Elsworth, a News Corp national personal finance writer. Sophie, good morning. Thanks for joining me.
Good morning, Danica.
Firstly, can you take us through the scheme itself? What seems to be making it so attractive to first home buyers?
Look, Danica, this scheme started on January 1, and what it basically does is allow first home buyers to enter the market with as little as a 5% deposit. Now, traditionally, when you buy your first home, you need at least 10 or 20% deposit in most cases. But this scheme is allowing first home buyers to enter the market sooner than they otherwise would, because what the government is doing is guaranteeing the other portion of the loan that they don't have. So, for instance, if they have a 5% deposit, the government will guarantee the remaining 15% of the deposit, which means they don't have to pay lender's mortgage insurance. Now, lender's mortgage insurance is incredibly expensive, and it protects the lender, not the borrower, if there's a default. So in short, it's helping people come up to the banks and say, look, I want to apply for a home loan, but I only have 5% deposit, and it's allowing them to get in sooner.
And Sophie, the first 3,000 positions have now been filled. Is that surprising?
Not really, Danica. I mean, everyone is hungry to own their own home in Australia. The great Australian dream, has always been around and won't be going anywhere anytime soon. People want to own their own four walls. And by doing this or applying for this scheme, it can save them thousands of dollars in that lender's mortgage insurance charge that I explained earlier. So I'm not surprised that the first 3,000 spots have already been filled. But let's not forget, there's another 7,000 spots available this year. And these spots are constantly changing. Someone might go through all the stages, get the approval to, take out a loan with the relevant bank. But they have to follow through within 3 months and buy a property. And if they don't, they lose their spot. So for those people out there who think they've missed out, they absolutely have not.
So what happens now then with these applications? How many applicants can be given the green light?
Okay, so CBA and NAB, Danica, are the first two banks that have come on board the scheme. So the first 3,000 spots with them has gone. From February 1, another 2,000 spots will be available with CBA and NAB. And also from February 1, another 25 lenders come onto the scheme. Now, these include a lot of smaller lenders, including CUA, Gateway Bank, GNC Mutual Bank, Bendigo Bank. They will have spots as well. So, look, basically from February 1, there'll be another 7,000 spots. But like I say, the spots are constantly moving. So if you are thinking about buying a home, get your paperwork in check now. Go and get your pre-approval from a bank and make sure that the bank you are applying with is part of this scheme, because, as I said, only 27 lenders in Australia are part of the scheme.
Some good advice there. Sophie, we're now a couple of weeks after Christmas, and of course, millions of us will now face this massive challenge to pay back credit card debt after the Christmas rush. Can this be quite a stressful time for people?
Oh, absolutely, Danica. Look, what's going to happen now and in the coming weeks is we're going to start to see our credit card bills roll in. And that's when you're starting to remember all those spends that you had over the Christmas period. You probably blew your budget a bit. Look, we all do it. It's no point feeling bad about it now, but you need to have a strategy in place. We owe $43 billion, Danica, on credit cards. About $27 billion is accruing interest. It's massive. We have to get this debt down. We are moving away from credit cards slowly as a nation, but we're moving to buy now, pay later schemes. So we're removing one type of credit to really another form of what effectively is credit. So don't panic. When you get your bill, just think of a strategy, seek advice if you need it. But firstly, stop using your credit card to continue making the situation worse.
And what would be some of your tips for people on how they can pay this off?
Well, firstly, I'd be looking at how much I owe, Danica. I would be looking at my credit card interest rate A lot of rates are above 20%. However, there's plenty of cards out there that have rates, in single-digit figures. I'd also be looking, if I have a debt that I cannot pay off, moving that debt across to a balance transfer card. These cards are effectively credit cards where there's no interest rate for a set amount of time, often 18 to 24 months. I would get one of those cards, move the debt across to it, cut it up, do not use it, and pay down that debt while you're not being charged any interest in that period to try and get rid of the debt, because credit card debt, Danica, is one of the worst debts we can have, with interest rates above 20% in many cases.
Certainly is the worst and the most risky. No one likes to get that big bill at the end of the month. Sophie Elsworth, appreciate your advice. Thanks for joining me this morning.
Thank you, Danica.